Welcome back to Wikiverse Forex Market channel. So today we would be learning about what is the right perspective that you need to have in Forex market. So yes, there are a lot of financial markets and recently we have been hearing a lot about crypto, Forex, stocks, Nifty, Bank Nifty. There are a lot of things that we go through every single day through social media, maybe via friends. So I have discussed very detailed video about what is Forex market and how you can start your first account with $1 on our previous video. I would drop a link in description and also you can check out my profile in order to see more videos that is related to Forex market. But on today's session, we would be learning about what should be a right perspective, especially for a beginner when you start into Forex market. So I'm not wasting your time. Let's start to the session right away. So first, I'm going to introduce you what is the right way, what is the right introduction to the Forex market. So the goal of this guide is to spark your interest in education and act as your first step in learning how to become a successful trader in Forex market. So yes. So why trade Forex? This would be the one and most common question that I get from my relatives and friends that they would say, yeah, you can invest on stocks, you can trade on options, you can trade on derivatives, futures. Why do you choose Forex, specifically Forex? So my answer for them will always be the time, the liquidity, and the millions of opportunities that you get in Forex market when you compare to stock market. So why trade Forex? The Forex market is where traders from around the world can trade the currencies of global countries. So the Forex market is, as you might know, it is one of the largest financial market in the world, estimated around 4 trillion transactions every day. $4 trillion transactions every day means that is a huge volume of financial market. That is a huge asset, guys. So there is no like problem for liquidity, there is no problem for volume. There is always someone who would be trading and be active in the market, but there are few specific times that you should focus on, which we would be learning on our future sessions. So why trade Forex? The time, it is 24 hours market and also active on 5 days a week. Monday, Tuesday, Wednesday, Thursday and Friday, Forex market would be there on 24 hours. It won't close the market time like Indian stock market, which closes at 3:30 p.m. Forex don't have that kind of time limit unless and until it's Saturday or Sunday. Okay, so the market is open for everyone, especially there is a huge potential for people who are working on business, people who are working like especially entrepreneurs, people who are in IT sector, people who can really manage at least like 45 minutes to 1 hour in a day to learn in the market. If you can practice at least 1 hour in a day, then you can start thinking about choosing Forex market. So I would suggest the more time you spend, the better it would be, because trading is a skill. It's not something that you learn from a textbook. It's not something that you learn from a YouTube video just like this. It's something you learn from experience. Okay, so whatever things that I tell you, you learn from experience. So we will be having activities, we will be having practical stuff, and also we would be connecting via our mediums. Okay, so don't take this as lightly as like normal videos that you can see or find in YouTube, which will tell you how to trade in Forex market. Yes, definitely it can help you on technical stuff, but without the foundation, what is the point having the strong steel in the world, right? So in order to build a beautiful palace, in order to build a beautiful fort, you need to have a strong foundation, and that is what we are going to touch here as a first step in order to your journey to Forex market. So yes, so as we discussed, Forex market is not time limited. It is one of the largest market in the world, and it is a seamless and decentralized market because Forex market is not governed by a single country. It's not governed by US, it's not governed by Canada, it's not governed by any specific country. It's a complete decentralized market. So no government or no entity is owning this market. So there is no manipulations or insider trading or nothing is going to happen in Forex market because it's decentralized and it's completely active across the globe. So there is no limitations to the opportunities that we have in Forex market. So there is also one thing that people say, like forex market is 24 hours, it is a long term perspective. You have to see this as a long term perspective. Some people get misguided in a way that forex market is like investments. No, if you want to invest, I have seen some people, they tell me they have invested in gold. So when I ask them to show your portfolio, they would see show me XAU USD, which is a currency pair, which is a commodity pair of gold. XAU USD, it is a commodity pair of gold. So they show me this, and I could see that it's minus $300 or minus $500, sometimes plus $1,000, something like that. So these people don't know what is actually the gold or commodities in forex market. How can we trade on that? That's like they take misguide this or mistreat this forex market currency pairs as a sort of investment. No, in my word of advice, never take forex market as a long term perspective. Never take it as a, like you buy a currency pair and hold it for 2 or 3 years. Yes, there may be some people who does that, but take it as an active income instead of a passive income. Passive income, not in the sense like you are earning an extra income, but don't take it as a SIP or don't take it as a long-term investment perspective. Don't hold it for more than like 1 month or 2 months, something like that. Make it as an, this is from my point of view. There would be other traders that have different perspective according to their strategies, and that's the beauty of forex market. See, there are a lot of traders, they have different opinions about the market, so everyone has a different view, but end of the day everyone come to a single conclusion. If they are a professional trader, that is the risk reward. Before entering into market, before entering into trade, make sure that you have a proper risk reward, which means if you are taking a trade, you should be aware about what is your risk, you should be aware about what is your reward. So both are very important. I will show you in a few minutes what is that and how to set up a risk reward. And much over, I would give you a right expectation. We won't be touching any of technical side today deeply, but a basic segment, basic stuff which should get you good start in forex market would be covered in this session. So take trading as a complete active income. Okay, you have to be actively there. You just don't come into a forex market, buy a currency pair and vanish, because you have to actively in the market understand what is happening around you. Then only you can find an edge in making money in forex market. Okay, so there are many advantages to the forex market, and I have talked about the time, I have talked about the days, I have talked about the liquidity, which is volume, how many people are hard trading in a day in forex market, and also low cost. When you come to stockbrokers, you can see the major disadvantages are transactions, huge transaction numbers, which they charge for each of your trades is very high, stupidly high. And most people starting with very low amount, very low money, maybe don't even see profit and have to give money from their pocket to the broker, even if they end up in profit if they use very low capital. But when it comes to forex market, you can even start as small as from $50 or $10, and you just scale up according to your space, according to your time, according to your experience. There is no hurry, because you don't have to pay anything for the broker unless and until there should be a commission based broker account, which I have discussed on my previous video when I started an XNES account. So please check that video if you haven't. So there are two types of accounts. Most probably there would be two types of account with a forex broker. One is a account, standard account, which comes with spread. So spread is basically, I have talked about this, but still I would tell you, spread is the difference of the amount. Like it's like a small commission. Like if you're executing a currency pair trade, let's say you are taking a trade from 1.12345, your trade would be executed from 1.2348. So from 4 to 8 or 5 to 8, the difference is called as spread. So sometimes these broker take these spread as their commissions. most of the time spread also increases due to the volatility, due to the liquidity of the market. Sometimes there would be major news happening, so there would be unevenness in buyers and sellers, there would be confusions in the market. So this spread can change according to economical factors as well, but major of the share goes to these brokers. And also there are broker accounts which also take the money as a commission. So there would be tight spread or very zero spread. They don't You can execute your trades according to the market timing, but they would charge you a small commission. Like it would be a fixed rate, there won't be any scalable income. Most of the brokers would take a fixed rate for commissions like 0.20 cents or maybe $1, depends upon your trade volume also. So there would be a fixed commission based on the broker. So compared to our other markets, which is forex market, is very easy to start, which has very low broker, but there are, guys, a lot of scams out happening. So I want to make sure this video much more awareness of forex market. See, I have a friend in Dubai. So once I have had a conversation with him, so he asked me to like take a broker account in forex. So he's working for a so and so company, which is a broker. So he asked me to take an account. He told me the sessions would be free, the classes would be free, but I have to open a broker account in their name, and also I have to put a certain amount of capital. So I thought this is cool, but when I later on researched, I have a mindset: whenever someone is approaching for something free, I would really dig in deep, because anything that is free, which is there's something fishy according to my experiences. So when I started digging into the Dubai market about forex and things like that, I came to know that 99 percentage of sales or things happening related to forex, or scams happening to related forex. There are scams and there are genuine people. I'm not mixing through, but still, most of the time, 70 percentage of the time, there are people who scam in the name of forex broker account, because there is no certain entity who properly regulate in forex market. Yes, I know I have told you it's decentralized, it's safe, but there are also people who can manipulate the system and come into forex market as a forex broker. So you and me, if I have enough capital, if I have enough resources, if I have enough manpower, technology power, I can also become a forex broker. There is no bigger limitations to it. But the investment and return ratio is very high, because if someone comes into my broker account, start opening my broker account, they would give me $500 for nothing. And also I can take their trade profits from spreads, and which is my major share. So like people come into this segment and start scamming people based on the name of forex broker. So how do we choose these forex brokers? Only trade brokers that is recommended by famous forex traders. Also, you do your own research. That is the biggest thing that I would tell you. Like somehow or anyhow, make sure that you have a small conversation with the people of that broker account. If you can't interact with any of human beings in that broker account, don't open it. Or it should be very trusted, super trusted, it should be regulated, it should be having valid license on a specific country, which is not an island. Most of these forex broker, they register their companies on an island. So there is no rules or regulations or enforcement which can breach these accounts and cut them off. They don't know who is actual developers behind this, they don't know who's actual owners behind this. So stay away from these skeptical and sketchy forex broker accounts. Make sure that you go with the trusted one. And I'm not recommending any of them, but I still have a really good experiences with two of the brokers, which is XNES and FXTM. I would drop my opening link down on the description. You don't have to do it. You can also search in Google. You can take the hassle of searching in Google, type in FXTM or XNES. But if you go through my link, you would be getting certain benefits and discounts. So this is not a promotional video. This is completely up to you. And let's start about the potential of forex market. So first we have to understand, when it comes to forex market, there is no specific place. It is not a building or located in a specific place. It is a like supermarket. So this supermarket is completely listed in virtually. It's a virtual supermarket. Things that you buy online, things you buy, go shopping from H&M or Myntra or Flipkart, Amazon. It's like a digital supermarket. So what do we have inside this supermarket, digital supermarket? So let's consider this as a forex market. Let's consider, give it a funny name, forex supermarket. Forex supermarket. So what do we have? So in supermarket, you might have visited a supermarket or shopping mall, things like that. So what you can see inside that there are different kinds of things. Like there won't be there won't be a single product. Like you can see, there won't be not just an iPhone. There would be two different stuff. There would be a section for iPhone. There would be also a section for glasses. So there are different things that is stored in a supermarket. So let's assume that we have different kinds of product. Let's assume that we have a product called, let's say, we have a product called Euro USD, EUR USD. So let's assume this is a product, Euro USD, right? And let's assume there is a different product here. So basically, there are different, almost 100 plus different kinds of products with different names. So we can take this product right now. So what is this? So EUR USD means you can see euro and US dollar. We know obviously US dollar, and most of you might know euro currency as well. So in Forex market, there is no single currency we can trade. You can't just trade on US dollar. Neither you can't just trade on euro. There would be two currencies intact, which is called a currency pair. So this is called a currency pair. So when we take in Forex market, there are a lot of like almost 150 or 160 currency pairs that is listed in Forex market, which we can trade with our Forex broker and trading platform. And you can find there are several currency pairs like this. I will show you an example. Go into a website called TradingView. So what is TradingView? TradingView is a chart provider which can help, which helps us to analyze. It's a website that helps traders and investors to analyze stocks, cryptocurrencies, and forex market. So I have created a watch list here, which I will show you how to do that. First, let's see. Let's search for a product. So there are, like as I said, there are different products that we can do. Once you go to this search section, there are all stocks, funds, futures, forex, crypto, indices, bonds, economy. So we are learning about forex, so obviously we are going with forex. So here, once I click here, you can find there are a lot of currency pairs, right? There are a lot of currency pairs. You can go as deep as like this. So coming back to the first section, you can see on the top layer we can see euro USD, GBP USD, euro USD, USD JPY, and also there are currency pairs that is listed twice, right? You can see the same currency pair. So you would be asking like, why is there two currency pairs and with different names? So you can see these are different servers, these are different brokers, which we can access their charts according to their price point. So there is no major difference on this. There is no major difference. So you there, it's okay to go with any of it unless and until you are going with the forex here and you are taking the right chart. So euro USD, there shouldn't be any numbers in front or backside of these currency pairs. So once you click that, you would get a certain chart. Most of you might have seen this kind of technical charts in your favorite YouTube channel, or maybe you explored your forex journey by yourself. So this is the trading terminal. This is the like chart terminal of TradingView, and you can see the currency pair which you selected over here. You can see different time frames, which you can see 1 minute, 3 minute, 5 minute. 5 is blued here, and this is the currency time frame, currency pair time frame which we are watching right now, which is on 5 minute. So I have discussed about what is this time frame and how to analyze it on my previous video. So make sure that you check it, and also for the sake of this session, I would be explaining you very shortly. So once you click 1 minute, you can see there is a difference in the chart's time frames. There is a chart pattern, right? It wasn't like it's selected on 5 minute, there is different on 1 minute. So this is not different charts, this is the same chart, but you can see this red and green, these are called candlesticks. So there is red candlesticks, there is green candlesticks, these are called bullish and bearish candlesticks. So candlesticks are a way of technical data which we use to analyze anything related to these financial assets. So if you want to analyze something, its price action, its history, its movements and all, we use this graph which is used to, which you can see here on the right side, these are the price of this currency pair, exchange rate of this currency pair. Here you can see the time. So once you go really back, you can see how these currency pairs performed. There was a big red candle here, right? So market, big red candle. So what is actually this red candle? Most of you might know. So red candle represents sellers. So also sellers are also called in a different name like bears. So it is a bearish candle. So bears means, like, bears, what they do, how do they attack, how do the bear attack? They attack with the paw, right? They hit everything down, they beat everything down, they don't do like this, they don't do like this, they hit everything down, they attack their prey down. So that action represents the bearish candle, which represents the seller. So the market is going downwards, so it's a downtrend, trend downtrend. And you can also see green candle which goes like this with the huge green candles like this. You can see here, these are the green candles which also represent bullish candle, which represent buyers. So if there is a lot of buyers in the market, there would be green candle which is bullish candle, which we say bullish trend. Okay, so uptrend, also other word is uptrend, so the market would be going upwards. So why did the bullish name came? Just like the bear, how do the bull attack? They attack with their horns, right? So they attack with their horns, they attack their prey upwards, so things will go up. So this is how the animal kingdom is represented inside the forex market or any financial market. So this, as simple as that, we learned about what is green candle, what is a red candle, how and what they represent. So you can see there are different shapes, some candles are filled, some candles are not. You can see there are lines on the upside and downside of these candles. So what is this? So in this live market, I'm going to show you what is actually happening in the market. So let me come to 1 minute. As you can see on 1 minute time frame, the market is going live right now. So you can see there is some kind of green color candle forming up, which means bullish candle. So the market is expected to have more buyers, and now it is red. So one piece of advice from my years of experience: don't go with the colors. The colors can actually trick your brain in taking very bad decisions. So make sure that you go with your studies, your strategies, and not with the colors. So that's why I always change these colors into things that I want. So for the sake of our video, for the more a better perspective, I'm switching this theme to dark mode. Okay, so mostly you can change all these colors from this section, and yeah, you can basically put different colors to this. Yeah. So in candlesticks here, you can see there is body, borders, and wick. So I will tell you what is more deeper about what is about reading a candlestick. So when you mean by body, which is a complete candle, so this is complete rectangle over here is the body. So once I change this color to white, you can see every body of this candle completely changes, right? So this is called body of a candle, which has that depth of that color. So to a bullish candle, I chose to be blue, and bearish I chose to be white. Okay, because as surrounding us, like we once we are born, we are shown red as a danger signal and green as a good signal. So these colors can also influence our decisions in taking trades. That's why I completely go away, stay as far as away, go with the red and green color. So make sure that you change into any color you want, pink or any different colors, or you can even put the same color. There is no issues on that. So for the purpose of this video, I'm going with this white and blue color. So this is the body of the candle. So borders, as I said, it's up and down. So once you change into red, you can see the complete body of the colors which you can see here of the bullish candle. If I chose this, you can see the up and down and sides. So the complete borders of this candle can be represented as you can see here. So I'm changing to white. So this line which you asked me before is called wick, or shadow of a candlestick. So what wick means is that it is an, like, it's showing that the candle has moved to such space and came back. So how does a candle form? First of all, as you can see, this is a 1 minute time frame. Here you can see seconds. So the candle has opened from here and moved upwards. So once we end this video, once we end this timer, we can see the journey of these candlesticks, how far it has went and where it ended. See here, as you can see on the live market itself, you can see the candlestick went here. If it comes back, if it comes back, you can see this travel distance over here. You can see it as a line. So it came back. It came back to this position. So you can see its journey. See, this is called wick. So it's a shadow of a candle. It's the path which it has went, and it was unable to complete that trend and closed in some different section. So the market now went up. So let's see where it closes once the timer 3, 2, 1. So the market closed at this point. So it didn't went up or it didn't went down. So the market closed at this point. So the market opened here and closed here. It tried to go here, but it didn't go there. It came back to this position and closed here. And the second candlestick opened right here, but it is showing a huge sellers. So white is our bears. So it is showing a downtrend, or it is showing a bearish action which is happening in the market. So I hope you understand the candlestick thing. I will show you a one more example which can help you understand much better. So opened candle here. So the market opened here. It tried to go here, but it was not able to make its power, make its continue its journey here up to here. So it came back and closed here within 60 seconds. So in 1 minute time frame, we can see the market has made this kind of candlestick pattern. So each candlestick pattern has different names which we will learn on a different video. So make sure that you subscribe to the channel and also like this video so that you can continuously get access to my playlist when you search for liked videos. So this is how a candle is formed inside a candlestick chart. So this is how we are going to analyze, which has huge importance in our future videos. So that's Euro USD for you, and this is 1 minute. So what happens if we select 15 minute? So each candlesticks formed here is within this 15-minute time frame. The candlestick will only close if it is it is completed this stopwatch, and each candlestick we can see here is completed with 15-minute time frame. So this body is completely done inside a 15-minute time frame. So such a big movement that happened in the forex market. You can see once you shrink the chart, you can see the overall the market is in a downtrend in 15-minute time frame. But I will tell you an advanced hack which you certainly like sit on this video until this time. So I would be sharing you an advanced hack in order to analyze the forex market. So there is a small activity which I want to give to you. So make sure that you note it out. So go to TradingView website, take at least 3 currency pairs, which you can see from here. These are few currency pairs which I don't take this. These are few currency pairs which I have marked. Go with these three: Euro USD, GBP USD, and also one more, USD JPY. So go with these 3 currency pairs. Make sure that you take note of this or take screenshot of this, and make sure that you watch all these currency pairs. So when you come to the technical chart, once you go through these currency pairs, write down what you found similar on these three currency pairs and what you found different on these currency pairs. Yes. So these three currency pairs, the trend. So, like, is there any difference? Is all three of these currency pairs are going on a same trend, or it is going on a different trend? I would name one last time before ending this video. I would give you three names of three different trends which we have. One is bullish. So, if the market is going up, we can say it has an uptrend. So if the market is going down, we can call it as downtrend. So what do we call if the market is going side? We call it as sideways trend. Okay, so the ranged market. So it's a range bound market. We call it as a sideways trend. There is no bigger movements in the market, so it is not a good time to trade. So always go with the trend. So uptrend, downtrend, and sideways trend. So make sure at the time of watching this video, go to the trading view chart and write down all these currency pairs, and also equal to that what trend that you can see on 1 hour time frame. So this is 1 hour time frame. So go click that, and what type of trend that you are seeing in at least within a week or within a month. Okay, so in a monthly time, I will give you in a month or in a week. In a week would be fine. So in a week, what is the trend of that currency pair? So comment down your answers once you found out your experience. So this is a really good activity, finding the trend of currency pairs as a beginner. Okay, so that's that for today's video. There would be continuation of this video on next session. Mostly on next week, I would be uploading that video also, as well. So thank you. So I'm not an experienced YouTuber or something like that. I'm just sharing my knowledge. So if you like this video, please make sure that you do these activities first and then like and subscribe, because if I could bring a small change to your experience and knowledge, it would be great help for me. I'm not asking any money or things like that. So a small like and subscribe and share it to your friends who actually need to see this video. Please make sure that you share this video as well. Okay, so that's it for today. Have a nice day, have a nice weekend. So make a bash, always learn, do your research, and only then take action when it comes to finance, when it comes to trading. Okay, thank you, have a nice day.